Greetings. Currently in observation. I've been monitoring this pound USD, and I'm actually still keeping an eye on it. The behavior and the movement has developed into some stability. So I want to continue to monitor that one. By the way, this is the 2X project on QUOTEX, and this recording will represent trade number 5. Trade number 5. This is the second phase, which is the 390 starting balance. And again, we've increased our trade size, our initial trade size to 50 bucks. And we're just right now waiting and observing in anticipation of the market presenting us with stable movement, the right behavior, and then ultimately setting up a profitable trade for us. And I hope that this commentary that I give as I'm doing this project proves to be very valuable for all of you, in particular the people who are not in training. Once you get into the training, you see right away how powerful the things that I have shared with everyone truly is. You start to get clarity on the terminology that I use, words like behavior cycles or cycles of behavior. You'll know specifically what I mean by that when you get into training. I've been digging into movement, market movement as of late. And I'm just building on that because market movement is really the key to profitable trading, because once you understand movement, you'll know what overall behavior needs to be present in addition to the movement that is backing up that behavior. You need to, you'll know what needs to be there before you trade. And the reason that that is so important is because you're learning how to understand movement, how movement relates to where the market has previously been, how movement relates to the cycle of behavior that the market is currently in, and how putting all of those things together sets up your trade to be profitable. Because that's the bottom line. When you are on this platform trading, if you can just manage to be profitable more often than not, you can put yourself in position and build your way up to a point where you can generate income through your trading. You'll find that it's more beneficial to trade less often because you'll wait longer for the movement to be what it should be before you enter a trade. I think that on a platform like this, because there's so many opportunities to trade, people get excited about how well they can do. But that's only hypothetical until you truly understand what you're doing. Because if you don't take the time to learn and to understand how the markets move, when you're looking at trades, the trades are isolated because they may or may not be backed up by the market's movement. So oftentimes people will go, and look in hindsight, oh, I could have done this. I could have done that. I could have taken this trade. Wow, look at that. There's another trade. Man, these trades are great. Hindsight is 2020. In real time, you're dealing with how the market's actually moving. And the way that it moves is not always seen in the way that it ends on a candle. So when you look at the chart, you're seeing the candles, as the color that they are. For example, reds and blues, etc. But you don't know out of how many of those candles was the movement back and forth to the point where that candle could have been going between red and blue 3, 4, 5 times before the candle closed. It could have been blue first. Could have been red first. Could have been blue, then red, then blue, then red, then blue, then red, and ended red. See, that's market movement. All of the in-between activity that takes place before the candle closes. Here I am once again giving you guys nuggets. And as I've mentioned, you guys definitely need to watch all of these trade videos, these observation videos all the way through, because the commentary that I'm giving along the way and during these recordings is powerful stuff that will teach you exactly what it is that you need to do before you begin trading. Oh, I'm going to fund my account. I think I'm ready. Okay. Sounds good. There's a question that I always tell people to ask themselves. The question is simple. Based on how the market is moving, would you want to be in a trade? It's a very simple question. Based on how you see the market moving right now, would you want to actually be in any trade? Right now is a good example. Did you see how many times this current candle went from blue to red? And look at where it ends. It ends red. Did y'all see that just now? There were at least 3 or 4 instances where it went from red to blue and then back to red. So, for example, if you were selling, if you sold and you entered your trade on this candle, you would have had to literally sit there and deal with the market moving back and forth 4 times before it ended red. But now when you go back on the chart and you come and you look at this, it just looks like, look at all of these red candles. You guys understand what I'm saying? But in real time, that's not what you're seeing. In real time, you're seeing back and forth movement where the candle is going from blue, then to red, then back to blue, then back to red. All of this is market movement. So this is why I do these observations that lead up to the trade that I end up in. This is why many times you'll see me observing and I didn't enter the trade. If there was one to enter, I just didn't do it. Why not? Because I'm looking at the movement of the market and I'm seeing instability in the movement. So if I detect instability in the movement, I won't trade because I need my trade to be backed up by stable movement. Making sense? Mm-hmm. Yep. Yes, indeed. Through observation, you also begin to learn the nuances of the movement. Like you start to see how the movement will begin to dominate as far as momentum. Because there's a difference between when the market is just kind of moving steadily along and when the market is accelerating its movement. And it also is stable in that movement at the same time. Just picture this. The market is accelerating in one direction. And instead of coming back in the opposite direction, it continues in the same direction. Because the movement is stable, meaning that wherever it moves, it remains. So if it goes to a point, it continues to go past that point if there is still acceleration of the move. You see? Another thing about the markers that I set. When I set markers, it's because the market has reacted at that point, at some point. And if the current behavior and stability of movement is more dominant than whatever caused the market to react at that point, you'll see the market move past that point with no problems. It won't have a reaction, and if it does have a reaction, it will be a short-lived one. I'm giving you guys a lot just so that you are aware. Some of you don't understand yet just how much I'm actually teaching you in these recordings. This is why I say just watch them all the way through. So this is really a free training series, to be honest. But you still need to get into actual training, because if this is something that you're taking seriously and you really want to do, you need the totality of it, not just the free stuff. Oh, but it's free. I don't got to pay $100 a month. And therein lies your problem. You don't want to pay, huh? Okay, well, if you don't pay me, you're going to pay the market. I guarantee you that. Market's going to collect from you anyway, so it doesn't even matter. Yep. That's how it works. But the training is more than just what you hear me talk about on these trade videos and during the 2X project. It's way more. You're in a group chat. You're actually in the environment with other students who are learning the same thing that you're learning. We're sharing recordings in the group. I'm giving exams because you need to be tested on what you know. So I'll ask you, well, why did this work? Why did this trade work? And you need to know. And you'll only know if you're in training. So anyway, I'm going to go silent for a little while. I'm just going to continue to observe and keep an eye on things. And if something develops, I will come back on and give commentary or, whatever needs to be done. All right, so I'm in the background. Y'all sit tight. All right, so that wraps it up. Um, Here on this one, you got an opportunity to see me take a third entry. It's very rare. Um, but again, my money management is designed very aggressively. So, and for those of you who follow me on Nadex, you're already aware that we kind of do things by the all or none method, so to speak. So, in other words, if need be, we're always willing to risk the entire account in pursuit of our profits. And the reason behind that has more to do with confidence and sticking to our protocol that we follow. So for example, the protocol that we have here on QUOTEX is very simple. We just are observing the market primarily until we see stability of movement that backs up the cycle of behavior that the market is in. So those two things combined would be a part of the reason that we're entering into any trade. So we're not just throwing darts. Like this is not just me just taking a chance, like, oh, let me try this one. Oh, that didn't work. Let me try this one. You guys got a chance to see on the first trade, the first entry that I took a re-entry. And I actually don't do that the majority of the time. And I actually have taught my students not to do that anymore because it's something that I used to do early on when I started on QUOTEX. Now, I always know why I would do that. And you got a chance to see I did it on the entry earlier and it didn't work. The re-entry did not work. It came close, but the market, was in that moment where it was unstable and it went back and forth, back and forth, back and forth, and it ended up not working in my favor. So I just, reset and started over, even though I knew that I was basically going to take a third entry, but without any hesitation at all, restarted, reset, and looked for a new, fresh, I'm not going to say a trade opportunity because that's not what it is, but I looked for a new, fresh moment in the market where there is stability of movement and a cycle of behavior that I'm confident in. And as soon as I saw it, I took the trade without hesitation, because when you are confident in what you're looking at and what you're waiting for, you don't hesitate. There's no need to. Your confidence builds up as the market stabilizes and the market builds and develops into the right behavior, and it builds up a cycle for you. What's the point of hesitating when the opportunity comes, or I should say when the time comes? Because there's always opportunities to do stuff, but when the time comes, why would you hesitate? You don't hesitate. When it comes, you take it. And that's it. So today was a good 50, going on 58 minutes for today's trade. So this again represents trade number 5, 2X project on QUOTEX. And this is the second phase, which was a 390 starting balance. So you can see where our balance is now after 5 trades. And that's pretty much it. So again, I hope you guys enjoyed the commentary today. And I hope you guys are watching these videos all the way through. I cannot reiterate enough how valuable it will be for you and how beneficial it will definitely be for you. This euro dollar looks real good. This looks real good right now. So, that wasn't the euro. That was the New Zealand, excuse me. So yeah, it's just one trade at a time. We do one observation at a time. We just wait on the market to give us what it is that we need to have. And once it does, then when the trade comes, or when the trade sets up, I should say, the trade will be backed up by what we've already seen has taken place in the market's movement and with the market's behavior. And that backs up the trade. And that's it. And that's how we move. All right. So I will see you guys on the next one. You'll know what it is. Mark Fuller, TeamAlliance. Again, trade number 5, 2X project on QUOTEX. Second phase, 390 starting balance. I'll see y'all on the next one. All right. Love, peace, and soul. Dom de Marco.